Okay, good morning, good afternoon, good evening from wherever you're watching me from, and welcome back everybody. Welcome back to the channel. Today we are going to look at the 7 important golden rules that every trader must be able to follow and be able to become successful. To become successful as a trader, there are some psychological tricks that you must be able to master, and no matter how best strategy you have, if you're not able to master these psychological tricks, you can become profitable. So let me just view this in large icons. So these are actually 7 golden rules I have prepared for you just to teach you, and so that you're able to at least go through and master them. Each of these rules is very, very important. So please pay attention to this whole video lecture and grab something and put it on your table, because this is what is actually going to make you become profitable. So if you're here for the first time, I'm Setowas, and I post such videos on YouTube here. And welcome back to the channel. If you have not subscribed, please kindly hit the subscribe button. And if you're my old subscriber, then just hit the like button. Or if you're my student, my old student, or my new student, just hit the like button and let's begin. Okay, if you've done that, thank you very much for doing that. Okay, so let's start with the first golden rule number 1. First golden rule number 1 is controlling your impulses. When you say controlling your impulses, what does it actually mean? Most of you guys, when you open a chart, when you open a trading chart, you are very eager to take a trade or to exit your trade. So you're not able to actually control your mind. Your impulses is your behavior towards your chart. You're not actually able to control your mind, and you just watch the charts and you feel like, hey, should I take a trade? Hey, should I take a trade? Where should I take a trade? Where can I find a trade? Or hey, should I exit my trade? You are not actually in a stable mind when you open your chart. So wherever you're not even supposed to take a trade, then you begin to take a trade and you get worried. And acting impulse instead of sticking to your strategy is actually a dangerous thing, because in a strategy, there is a place where you are supposed to take your trade. There's a place where you're supposed to take your trade, and there are some areas which does not also meet your criteria where you are not supposed to take your trade. But if you act impulsively and you always want to take a trade, even after you have one winning trade, you still want to take another trade immediately after one winning trade. That's what they call acting impulse. You don't know what actually you are doing. So wherever you're not supposed to even enter, you begin to enter. Wherever you are not supposed to trade, you begin to trade. And you act according to your own impulse, and you are very eager to either trade or to either exit your trade. And what are the consequences if you ignore this habit? What are the consequences? The consequence is that you're going to jump into trades easily. You jump into trades without a clear setup, and what is going to be the end? You're going to have a lot of losing trade, because you're going to have a lot of losses. You are taking trades which are not in your system. So please, don't do that, okay? Try to control your impulses. This happens to every trader at all. When you are a beginner trader and you begin, because you are in a mood to always rush, you always be having this kind of habit. So please, find a way to control your impulse. So please take a pen or paper and jot them down, because this is a habit that's actually going to ruin your life as a trader. If you're able to master this habit, master this habit is going to help you. And to be able to master this habit, you must know actually what they are and how they can harm you, right? That's why I'm sharing this video with you. So please, control your impulses is a very important thing to do as a trader. Psychological habit number 2 that you must practice and follow is to stay disciplined. When we say to stay disciplined, what does it mean? For most people, when they have a winning trade, they become too happy such that they don't focus again. They don't become disciplined again. And so for some others, when they have a losing trade, they also can't focus on trading again because they lose their discipline. They don't follow their system again. And what happens is that if you get to just one winning trade, or maybe series of winning trade, so first trade was a win, second trade is a win again, third trade is a win again, then you get out of your discipline. You think, okay, now you know much, so you begin to be indisciplined. And most of you guys can relate to this. Most of you guys watching me, Well, because most of my students who join, sometimes when you interview them or when you ask them, this is actually what they go through. They take one trade and they have a winning trade. The next trade is a winning trade, and they think they know everything, so they now get out of the winning trade, they get out of the discipline and begin to misbehave. They begin to go out of their trading system or their trading strategy. Now they begin to take trades which is not even in their system, and they begin to lose because now they've lost their discipline because they had winning trades. And for most people too, when they have losses, they have lost. Now they're out of discipline, which means they are now becoming emotional. They begin to act impulsively, or they begin to fear. They begin to crumble, and they can't actually take a trade. So please, as a trader, you must put in your mind that you're going to stay disciplined at all times, because overconfidence is a very good thing, but in trading it can actually harm you. If you're too confident, you can mess up whatever you're doing. And also, if you're too fearful, you might also end up in revenge trading. And if you revenge trade, means that you had a loss and you want to quickly recover, so you take trades where you're not supposed to take because you are in a haste to recover, and that is actually not good. Okay, so you can't break your rules, guys. Golden rule number 3: you must detach yourself from trading outcomes. When you say to detach yourself from trading outcomes, what does it mean? You see, most people see one trade. Let's say they take one trade like that. They take one trade and they think that one trade should be able to give them 100 million. And so if the trade does not go in their favor, they are not able to stay consistent, or they're not able to stay disciplined, because they focus all their energy on just one trade. They think that one trade should be able to give them all the money they want to get in this world. So they have put all their emotions in one trade. But trading is not done that way. In trading, we take multiple sample of trades. And with multiple sample of trades, you're going to have some to be losses, some to be wins. So you have to think in the long term, not in the short terms, because in the short term, you can have win, you can have loss, you can have win, you can have win, you can have win, you can have loss, you can have win, you can have loss, you can have win. In the short term, the graph looks like this: win, loss, another loss, then win, another win, another win. That's how the graph looks in the short term. And you have a loss, and you have a win, and you have a loss, and a loss, and a loss, and a win, like that, and the graph keeps continuing. This is how in the short term, this is how your account looks like. It's not straightforward like you have win, and it keep going. No, it's not like that. It's not straightforward like that. It's always going to look at the chart. It's going to look like the chart you have been trading. You have win, you have losses, you have win. Over time, you see that your account will be growing over time. So let's say you begin trading with $3,000. 3,000. By the time you realize, if you stay disciplined, by the time you realize, though with all the ups and downs, by the time you realize your account will now grow plus your profit, you are somewhere around, let's say, 5,000 or 6,000. Not from a single trade, guys. Not from a single trade. With multiple trades. You see, so see each trade as a part of a series of trades, so that you don't actually put your emotions in just one trade, thinking that it's only one trade that will take you from all the way from 3,000 and give you 5,000 for that particular moment. No, but a series of trades you are going to take over time. So please find a way to detach yourself from emotions, which means when you get a win, don't be too happy, because losses will definitely come. And when you get a loss too, don't be too sad, because wins are definitely going to come. And you can't tell which one comes first and which one comes last. If you think this way, then you can actually detach yourself from trading outcomes. And when you win or when you lose, you don't become sad or you don't become happy. Guys, are you listening to my advice? So use this strategy, use this system. Wins and losses are part of the game. So see them as this, and detach yourself from the outcomes of every single trade, because it's not one trade that will take you all the way to heaven, guys. Take you to heaven, get $100 million, and then you're out of the market. No, it's not like that. You're going to take several trades, and over time, your account grow month and month and month and month. That is what you have to do. Okay, but if you are not able to control you're not able to detach yourself from trading outcomes, then you are going to go through emotional roller coasters, which means you are not going to be emotionally stable, because your emotions are going to be based on your wins or your losses, which is going to lead to erratic behaviors, and it's going to whip your account, guys. So don't do that, okay? So detach yourself from trading outcomes, and this actually one of the biggest trading mistake most of you guys do. So please try and master this skill. It's also going to help you. Okay, so golden psychological rule number 4, managing your fear and greed. Fear and greed. This is actually one of the top most problems of new traders. Fear and greed. What does it mean to be fearful? To be fearful means that you take a trade. Let's say you decide to sell from this zone because the market was going upwards. Let's say you saw there was a support area here or something else, you want to just trade. Now you want to sell downwards. Now, if you sell here, your stop loss should be somewhere there, and your profit should be at least twice as your stop loss. But this is what fear can do to you. The moment, because the other time you took a trade and you had a losing trade, the moment the market begin to move in your favor a little, up to this point, when you see the market reversing a little, now you become fearful. So instead of you to wait for your whole profit target to reach, so let's say your profit target is $400. That's your profit target. $400 per a trade, which means when you risk, you are risking 200 to make 400. The moment you see the market is actually retracing a little because you are fearful, now you take your profit from this zone, which means your profit is going to be somewhere around $100. Instead of making $400, you make $100 because you close your account there, and you are fearful because you think that the other day when you took a trade from that side, the market went back and took your stop loss out. So now the market is reversing. It's not actually going to continue. It's actually going to come take your stop loss out. So you are very fearful, and you take your profit, a small profit. And in trading, taking a small profit is a dangerous thing because your risk definitely is going to be bigger. So always, if you don't take huge profit that can cover up for your risk, then you are going to have a losing business because $100 cannot cover up for $200, guys. You must take huge risk and also take huge profits. That's it, and you're out of the market. Always stay till your profit target hit, as you're going to stay for your stop loss to hit. So that is what fear can do to you. On the other hand, some people too, what fear can do to them is that after their entry is ready, let me clean all these things, guys. For others, let's assume that their strategy tells them that they should be able to take your entry here. That's what their strategy is telling them. But because they are very fearful, they don't know what to do even when their setup is ready. So they don't take the trade. Now the market moves in their favor, and they say, "Oh, I should have taken the trade," because they were afraid they didn't take the trade. Meanwhile, their system says they should take the trade. If you do that too, you can become profitable. So please, you must know how to manage your fear. Some people, on the other hand, they are also very greedy. For instance, they've taken their trade, let's say somewhere here. Their stop loss is supposed to be somewhere down there. Their take profit target should be at least twice as their stop loss. So let's say just twice, somewhere here. But because they are greedy, they want to take everything because they thought that the other time they took a trade here and they took their profit here, the market kept going down. So this time around, instead of them to take their profit there, they decide to wait again. They decide to wait for the market to skyrocket so they can take more profit. That is what you call greed. This is what you call greed. And because the market can not always be trending upwards or trending downwards, now the market reverse and now come and take their stop loss out and they are out of the market. So you see, greed has made you lose. Meanwhile, it could have been a winning trade because the other day there was a huge momentum and you think that, oh, I should have waited and taken all this profit. That is what you call greed. Greed means that you're not satisfied with the enough you have. You're not satisfied with what you have. So let's say you're supposed to make profit of 600. Because you saw the market moving, so, oh, I should have waited so that I can make profit of 2,000. That's what you call greed. You are supposed to know when you are supposed to exit the market and when you are supposed to be in the market. After the take profit target is hit, no matter what happens to the market, you don't care, okay? Don't care about it because it's not always going to happen that way. Some days, the market can keep trending. Some days, just after you take your profit, the market will reverse. So please, don't let greed lead you, okay? Don't let also fear crumple you. Be clear-minded and should be able to take good sample of trades. Okay, letting fear prevent you from taking a trade is not a good thing. You're going to miss opportunities, guys. And also letting greed lead you is also going to make you miss a lot of good trading setups or a lot of good trading profit, because you're going to wait for the market to come back and take your profit out, because you are greed. You don't want to just take some profits and leave the market. So please don't do that. Okay, please, these are skills you must learn them and practice them, because you become perfect with them over time when you're able to take out all these things out of your mind. So fear and greed is one dangerous thing that can actually harm you as a trader. So please learn how to deal with them. Okay, golden rule number 5, you must learn how to practice patience, guys. You must be very, very, very patient. Be patient means that, let's say if there is a chart and this is where you're supposed to enter, guys, don't rush and say that, hey, I want to enter somewhere there because the market is coming, guys. Be patient for the market to come to area where you are waiting for. Let's say you're using moving averages or trend lines. Make sure that you are very patient for the market to hit exactly the zone you are waiting for before you think of taking a trade. Because if you're not patient and you take a hanging trade, what are the consequences? Let's say the market is supposed to come down and you took the trade here. So which means you're going to put your stop loss somewhere there. Meanwhile, your moving average or your trend line is somewhere there. And you think that, okay, if I take my trade here because I know the market is going to go up, so your stop loss is going to be somewhere there. So what happened? You took the trade and the market begin to reverse and reverse and reverse and hit the moving average, reverse a little and take your stop loss out. Just immediately the market took your stop loss out, the market now reversed to your original position and started trending upwards, and you begin to regret. What happened here? What happened is that you're supposed to wait for the market to rather hit the moving average instead, so that your stop loss can be a little far away and the take profit target can be somewhere there, so that even if the market comes down a little, may still not be able to take your stop loss. But because you are not patient and you enter somewhere, let me change the color. You enter somewhere at the top here, it means your stop loss has to be a little far away from the moving average, which is not too far away, and the market can come, hit you out, and still move to the original direction. And I know most of you guys have experienced this. Is because of where you entered was wrong. You entered at the wrong place. So the market took you out, took your stop loss and reversed to the original position. So please be patient. Wait for your trade setup to be ready before you take a trade. Okay, take only high probability trade. High probability trade. High probability trade is what you have to be looking at every time. High probability trade. If the trade is not high probability, please don't take it. Okay, listen to my advice and it's going to help you. Okay, golden rule number 6, you must learn how to review and journal your trade. Because as a day trader, if you don't review your trade and journal your trade, then what are you actually doing, guys? If you're a businessman, you don't review your inventory, don't check your account, don't check your stock, what business are you doing? Trading is also a business. So please, as a day trader, you should be able to journal your trades. Journal your trades means that keeping records of all your trades, keeping records of all losing trades, keeping records of all winning trades, so that you'll be able to review them and then analyze them properly to know what has actually happened to you or to your trading career or to your trading business. Not keeping trade is a very bad thing, because most people think, oh, it's my own account, so I have lost, it's just $100, let me take it like that. The next day I have another loss, $100, or let me take it like that. Oh, today I have a win, so today I have plus $600, and the next day, okay, I have plus $300, guys. And over time, if the trade is just 1, 2, 3, 4, 5 trades, you'll be able to remember them. But over time, for the whole month, about 30 trades or to 50 trades, you might not be able to remember anything. And even if you remember them, the question is how are you going to analyze them to see what actually happened. So every strategy must be entered in the trading sheet or trading journal, and then you must correctly arrange them with their criteria, with images. I always tell my students to always take screenshot of every trade they take. So with images, guys, this is just example. This is just something I took from online, but I have shown you several trading sheets around here in this YouTube channel. So please, if you don't have it, create one journal for yourself. I have one journal I give to my students. It's not on this PC record, so I can't show you. But I have one journal I give to my students. If you are there and you're listening to me, just use Excel sheet. Create one, just label them accordingly, and just enter your trades there. Whatever amount you bought, which pair you bought, just put them in the journal, because reviewing it will make you avoid repeating mistakes, guys. You're not going to repeat mistakes again without realizing what went wrong. You should be able to determine when you were wrong and when you were right, and when the market was wrong and when your strategy was also wrong, so that you can refine your strategies. Because trading without journaling means you are trading in the blind, guys. Don't trade in the blind, okay? Listen to my advice and good to help you. Okay, so let's move on to the last trading, the last golden rule, and that is the last golden rule, that is maintaining realistic expectation. When we say realistic expectation, what does it actually mean? You see, in trading, most people fail in trading. About 90% of people who begin trading fail. Why? Because they come with unrealistic expectation, guys. Which business in this universe that you can start with $100 and within the next 2 months or within the next 3 days you grow it to $10,000? Guys, tell me, which business ever in this universe can you do that? You can't. Which business in this world you can start with $2,000 and just in 3 days or in 1 week, hey, you can grow it to $20,000? And they are showing you these things on YouTube, guys, and you guys believe it. How I grew $100 account all the way to $10,000 in 3 days, and you believe these things, guys. If you come into trading with this mindset, you can become profitable. Trading is just like any other business, any other profession. You must have realistic expectation. So this is the reason why about 90% of people fail, because they come with unrealistic expectation and they don't trade according to how they are supposed to trade. So they end up losing. So they lose rather whatever capital they brought, they rather end up losing it to the market, because their expectations were unrealistic and they're not able to actually follow a good trading system or a good way you're supposed to trade, because you're going to gamble your money. This is what you call gambling. This is not a business. This is what you call gambling. So what is realistic expectation? Realistic expectation means that you are coming to trading as a business, which means if you start trading with somewhere around $100 or $1,000, for those beginners, listen to me, at least you should be aiming at getting at least first growing it to 1,500 before growing it to 2,000, and so on and so forth. But not from 1,000 all the way to $1 million and you think you're going to make it in 3 days. It's not possible. But in trading, you can grow your account slowly, which means, let me clean all these things away. Which means if your trading capital is, let's say your trading capital is $3,000 that you begin with. Let's say you're a beginner, you have only $3,000 in your account. How much are you expecting at the end of the month as a day trader? At least if you trade well, you'll be able to get extra, let's say 1,500 as profits from your trading capital, which means now your capital has grown from 3,000 all the way up to 4,500, and the 1,500 becomes your profits. You can decide to either spend it or add it to your capital, and top up. Since your capital is small, top up and trade. That's it. Or let's say you decide to start with $5,000. At the end of the month, you can actually approximately or realistically you can make around 7,000 to 8,000. And what is your profit? Your profits out of this is going to be around 2,000, which is around 2,000 profits to 3,000 profits. And out of this 3,000 profits, you can decide to either spend it all and leave your capital, or you can decide to add it to your capital. Mostly, I tell my students that every profit you're going to make, even if it's $100 profits you're going to make, divide it into two. So 50 and 50. Add the 50 to your trading capital, back to your trading capital, and spend the 50 so that you feel like at least you are doing something. Don't put them all in your trading capital and trade. At least share into two. 50, you add to your trading capital to grow your capital, and 50 is your profit. So let's say that you make profit of 2,000 around the month, so your profit is 2,000, which means to divide 2,000 into 50-50, you're going to share 2,000 into 2, which you're going to get 100,000. You're going to get another 1,000. Now you add this 1,000 back to your trading capital. Now your capital is now 6,000. So which means you can increase your risk reward, or how much you are risking. Now this 1,000 is your profit, your raw profits that you can just take and spend. This is what you call realistic expectation, but not taking $100 to $10,000 in 3 days. How I grew $100 to $10,000 in 3 days, guys. And you are believing this. If you come to trading with this mindset, you are going to join the 90%. I'm telling you for sure, you're going to join the 90%. But if you have realistic expectation and take trading as a business on the whole, then you are definitely going to become very profitable in trading. So please have realistic expectations, okay? Just be realistic. Okay, this is a business I'm doing, and if it's a business, then how do I grow the business? Not to gamble your money, okay? So have a very good realistic expectation. So I think that will be all for this video. We've actually gone through almost all the golden rules I set for you guys, and this is what I've been using all this while. This is when I began trading. This is what I've been using. This is what I've been teaching my students. This is what I've been telling everybody guys to follow. So please practice them, okay? Practice this way. Just practice them until you become good with them. You can just take a screenshot of them through the video and just keep them, guys, or you can just journal them and keep them, okay? And keep practicing them until you become good with them. And I think that will be all for this video. If you enjoyed the video, don't forget to subscribe to the channel, and don't forget to hit the like button and subscribe to us. And until then, take care of yourself and see you next time. Bye.